Hello, investors. This is Ted Zhang and Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Saturday, July 13th, 4:36 p.m., coming to you from Fort Lauderdale with this weekend's Revere Roundup weekend walkthrough. As always, let's go through the trend gauge, the market state. There's actually a lot to talk about after last week. Connor did a great summary in the Thursday video, but we'll definitely discuss and wrap it up in this weekend's video as well. So the trend gauge, market leaders, bullish uptrend. Um, Short term, we have a green arrow. The S&P equal weighted indexes, the Qs, mid caps, small caps are all engaging with the markets. We do have that yellow pause with the Qs because we still are in historically extended territory around 8 ATR above the 50-day. And that's why we have in short term and medium term with that stop sign. However, medium term is still bullish up arrow, and then the long term for all indexes are above the 200-day. So we have a green arrow for that. So jumping right into the charts. Here's the S&P 500. And so last week we were quite extended, and this was after Wednesday. And by this time, we're about 5.5% above the 50, about 6 to 7 ATR above the 50. And this day was when we had that cooler than expected CPI, which came in 3% year over year. And what that led to was just a sharp rally in interest rate sensitive names like the IWM. See that gap up here, mid caps as well. And then other names like XBI, KRE, and XLRE. And what the odd action that day was we had a huge reversal in mega caps, as you can see in the S&P and the Qs. But on the flip side, RSP, like the small caps and big caps, gapped up as well with the QQQE making new all-time highs. So now at this point, we're seeing a market essentially just firing on all cylinders and this Goldilocks scenario that we've been talking about. And as we've talked about, and actually, as I want to mention real quick, when we had that really easy dollar environment from early November to that mid-March area, the QQQE was engaged with the markets as well as RSP, mid caps, and small caps. And ever since March, we've had some choppier environments for stock trading. It was primarily the mega caps that carry the indexes forward. So this, if you're only to look at the S&P and the Qs, it's kind of an illusion that the market's doing quote unquote so well. It was actually just a small basket of names. So after this week, our expectation, or at least what we're looking for, is a much better trading environment in individual stocks, especially in the smaller names and other areas of the market that we can participate in. And to quickly, so we're now in earnings season. We had JP Morgan, Wells Fargo, and Citi report Friday, and they did really well. And so when big banks do really well, beating top line and bottom line, that tends to show that we're in a pretty decent environment. So quickly, let's just go over the Dow then, since I've went over the other charts. Dow made a new all-time high as well, so engaging with the markets. FNGS had that sharp reversal, but then bounced and so far rejected the 10 EMA, but still above the 20. Here's the chart I showed on the podcast. The big 8 chart, just in a super strong uptrend. And now the RG8 gapped up like the other indexes I talked about and into new 52-week highs. And this is kind of how we gauge, it's our proxy of how well growth stocks and smaller names and momentum names are doing. So this is really healthy, and if this continues, that will probably present a very good trading environment ahead. Continue on. Off that CPI print, rates completely dumped with bond traders buying bonds. And what this means is we're starting to price in a greater probability of rate cuts. And in a bit, I'll show you the Fed swaps as well and what they're pricing in. Junk bonds, high yield bonds, pretty much making new 52-week highs. I think this is a new 52-week high close, so that's very constructive in terms of risk on. J&K is acting really well, and corporate as well. The dollar on the back of rates took a tumble as well, and that is pretty good for the markets as of now. as long as we don't shift into this recessionary narrative. Gold popped up as well, and we've been talking about this rectangle base. It looks like new all-time highs are quite inevitable at this point, but as always, anything can happen. Silver as well, just flagging and acting really constructive. Copper, same thing. Had a sharper pullback, but still reclaiming some moving averages and building out this base. Crude and gasoline are just chilling, just sitting right here, not breaking out, not breaking down. And that's actually pretty good. That just signals that we're not either having more inflation or heading into a huge recession. So that's good to see there. And then Bitcoin, we continue to hold above this 56.5K low level. So the UNR so far successful. And now let's see if we can take out the 200-day and get above the 10 and 20 once again. So onto some breadth. I haven't showed this in a while, but Pradeep's just a trader and he puts out this really nice market monitor and for breadth. And these two columns right here, number of stocks, up 25% plus in a quarter and down 25% plus in a quarter are the two main areas I key in on. And when it's green, that usually presents a good breakout environment or trading strength. And when it's red, it usually leads to more chop and a lot more selectivity in terms of trading strength. As you can see, after that CPI print, we had 1,072 stocks up 4% plus in a day. Since I've been tracking this, that's the greatest number I've ever seen. We could just quickly scroll back. Like you see a few hundred, 300, 400, 400, 600. And then I don't have right now, actually, I don't have the history going back to November fall through day, but you get the point. So now this is really good to see that there's more stocks up 25% plus in the quarter versus down. The bar chart, this is just a picture of net highs across different composites, New York Stock Exchange, NASDAQ, and the overall one. And we just have green across all timeframes right now. New York Stock Exchange exploded with net highs. That is exactly what we want to see, resolving some of that bear divergence that we had. Same with the NASDAQ, 289 net highs, resolving that bear divergence. The NYSE and NASI, we talked about this in prior weeks, hooked up above the 10-day moving average, RSI back above 30, and heading towards that overbought territory. But we're not even there yet. So that just shows that there's a lot more room to go. And even when we get to overbought territory, as you can see, it can stay up there for long periods of time if we're in a strong uptrend. NASI, same story. And then on the podcast, I talked about this as well, but this is an even better chart now since we had the Friday updates. Percentage of stocks breaking their downtrend lines, if we were to visualize that on these charts, and that resolves the bearish divergence that we've been talking about. And same with on the NASDAQ as well, the NASDAQ composite. CNN fear and greed, just dipping the greed territory, so nothing of too much concern. But AAII is flashing 49% bulls, which is almost 12 points above the historical average of 37.5% and close to the 1-year bullish high. And then the bears dropped to 21.7%, which is almost 10 points below the historical average of 31%. So there's still a disconnect there. And then the NAM came down from 100. So that's good to see. And hopefully we continue to see more fear come into this market as we make new highs. That would be really good to see, actually, since the markets love to climb a wall of worry. And finally, just want to showcase the Fed swaps after that CPI print. Here's September. Hold on. Let's bring up September. As you can see, we have over a 95% probability based off the interest rate traders pricing in a 25, or no, at least one rate cut, and there's a 90% probability that we get one rate cut. And then let's go to November real quick. Here are the numbers. It looks like the interest rate traders are pricing in 56% probability for 2 rate cuts by November. So one in September, then another one in November. And then December, actually it seems like we're pricing in 3 rate cuts now by the end of the year, which we actually backed off to 1 just a few weeks ago. So the market is definitely liking that. And with lower rates, theoretically, that is really good for the smaller and mid caps and interest rate sensitive names that carry a lot of debt, which is why you see real estate, home builders, biotech, small caps, and mid caps are doing well. So now I'm going to send it over to Connor, and he's going to talk about sectors he's looking at, where money's flowing into and out of, and then some stocks. I'm going to unshare my screen now.
Yeah, thanks, Ed. Can you see my screen? So per usual, going to start with some sectors. First one is hack, right? So we talked about this V-shaped move off the 200-day, wasn't really sustainable. And now we're starting to get that right side development, forming a cup and handle base. This is super positive for the cybersecurity stocks. IGV, very similar as well. It's a V-shape off the lows, and now we're starting to get that right side development. And, this pullback here is giving a lot of the software stocks time to set up, and they're looking a lot better. WGMI. So this is the Bitcoin miners ETF, and this is one of the best looking charts I'm seeing right now. This had a big move up off the lows, and now it's forming a handle here. Looks like a cup and handle breakout, and this coincides with the action I'm seeing in the stocks. Some of these Bitcoin mining stocks are doing quite well. And then this also ties into the narrative of if small IWM wants to lead, then more times than not, these smaller stocks outperform. And if you look at the weekly, breaking out of a nice weekly base. So good to see there. And then one ETF I've never mentioned, sorry. This is the, this is the clean energy ETF. And you can see this is getting back above the 200-day moving average. So that's a clear character change. And if you look at the weekly, this is breaking a big downtrend line. So this is like some of your solar energy names, very like rate sensitive stocks, but seeing this ETF get above the 200-day, that's positive. And on the show Friday, I mentioned XBI, XLRE, and KRE, all clearing the all-time high anchored VWAP. So I talk about those more in depth. And three sectors I also think looking poised to run. So I covered that in that one if you guys want to check that out. So on to the stocks. Irene, this undercut this level and is getting back above the 21-day. I mentioned the Bitcoin miners charts. All of these still look pretty good. Expect some volatility. This is a high ADR stock, so size appropriate, but you can see, these stocks continue to act well. Cores, again, another volatile one, but this one's setting up a high tight flag, strong day on Friday, and this chart continues to look great. Coinbase. So I'm going to focus on the weekly for this one here. And this continues to base on base. Had this base here, had this base here, here, and now it's forming another base. And obviously Bitcoin's being a drag on this one, but this stock is a clearly a strong name, and keeping it on the radar as it builds this base on the weekly, and daily would like to see it pop above this downtrend line, and you have the moving averages all stacked up, and like to see this RS line start to hook back up. MSTR, so they announced last week that they're doing a 10-for-1 stock split. This is effective August 1st. And keeping this one on the radar, we can see stocks sometimes like to run into the stock split, and this is clearing a downtrend line and coming right into this 50-day moving average. Maybe this RS line can crack this downtrend line along with the 21-day. And if you look at the weekly, positive weekly base, and this is like a big cup and handle base. Obviously need Bitcoin to start acting better. SQ, changing character day on Friday. It was living below the 200-day here, but it started to build higher lows. Price got compressed and got that expansion on Friday, and the RS line just hooked back above the 21-day. And I mentioned this name because Fintech Stocks, another group of stocks that tend to perform well when rates are lower. And if you look at the weekly, this is a nice stage one base. And it's still in this range, but here it's at the lower end of the range. And, if it gets back up to 80, and puts in a couple tight weeks, that could be a direction for the stock. HIMS, medical, biomed, biotech stocks are acting, healthcare. That whole group has been in favor for a week now, and this is a strong name in that group. You can see these earnings, very, very nice, triple digits. And this wedge pop back above the 21-day on Friday, and it closed mid-range, but overall still looks pretty good. And on the weekly, this is a nice weekly flag it's setting up. Zscaler, this is a cybersecurity stock back above the 200-day, forming a nice little consolidation. PANW, this is another one. Been watching this one for a couple weeks now. We got that breakout through 324, and now we're setting up this cup and handle. And, you know, obviously it did have this big earnings gap down, but it's reacted well since, coming back up, and now, especially with the sector looking a lot better. Tesla, this is, you know, it's gotten some huge volume lately. Finally got back above the 200-day moving average. It had this negative reversal on Thursday. It was some robotaxi news, but strong oops reversal on Friday. And, you know, maybe this can digest a couple days or off back to the races to the highs, but strong hold on Friday after that pullback. And obviously price action is telling you the story on this name. A lot of people gave up on it, but when you see a stock rally 40% in less than a month on huge volume, you better pay attention. And you can see the ants is starting to pop up. SMCI, so some good news yesterday. They're getting added to the NASDAQ 100, and that's effective July 22nd. And this is a really nice setup. I would imagine it pops on Monday. So we'll have to see, but this is coming against a big downtrend line, really tight 5 days of action, moving averages right below, and this RS line showing that this name is starting to outperform. And if you look at the weekly, this is stair-stepped really nice. Had a base right here, big run up, had a base right here, big run up, and now we have another base. So maybe this is, if it continues that trajectory, that's what the expectation would be. GEV, this one's been a volatile one, but overall, I still like how it's forming this base. Looks good if it can break out with volume. ServiceNow, this is one of the software leaders that I like, and this looks pretty similar to the ETF. Huge move off the lows. Now it's pulled back. It's digested some of those, that extension that it had, held the 50-day, and it's getting back about the 21-day. So this looks good. Overall, it's been pretty choppy in here, but you know, it's finally starting to show that relative strength. Datadog, another one, finding support at the 21-day, and good action after that big move up. So this will be on watch, you know, if it can get above those highs with some volume. Hood, this is another smaller name per se, and you know, with a name that you would expect to perform well if IWM's performing well, has this clear downtrend line from the highs, and it's consolidated nicely after this run from 16 to 24. The 50 days finally starting to catch up, and this is in the stage 2 uptrend after that big stage 1 base breakout. Instacart, this has got a pretty nice double bottom base, so I'm just watching this one for now. This 35 level seems key. See if it can get above that with volume. CEG, another alternative energy name that's been a rock star for a while now. This has trended really nice to the upside, and now it's forming the weekly base. And on the daily, you know, 50 days finally caught up. It's had 4 tight days right below this downtrend line. And so this one, I like the look of it. VST, utilities, I'll pull this up real quick. Utilities, they got back above the 50-day and put in a UNR, which was positive, and it's showing strength again. And VST is the leader here. You know, it's rejected this level here multiple times. So we'll watch this level, see if it can get volume, but I like how the 50 days caught up and it's been consolidating because the stock has been on a huge run. And then NRG, this is another similar name to VST in the utility group and very similar chart. So see, it's important to follow the groups and watch multiple stocks in a sector to see if the whole group is painting a certain picture. So that's a big list of stocks that I'm watching. And we'll see how they act next week.
Alrighty. And then before I get into earnings and the economic calendar, I'm gonna quickly go over the MarketSmith breadth charts because I think they're pretty good as well. And last week I talked about how I was watching the advanced decline line against its 10-day moving average. And after this week, you can see the NASDAQ completely broke out here. So that's great to see. New York Stock Exchange just soaring into new highs. And so that is great to see. And the New York Stock Exchange itself, the composite also made a new all-time high. So this really just shows and paints a picture that stocks are participating in earnest now. As you can see, this is another perfect depiction of from around this November 2023 era to mid-March, we had the New York Stock Exchange participating. And then we just went sideways while mega caps did all the dirty lifting. And that's where the divergence came with the S&P. No, that's the 600, sorry. The S&P 500 continued higher while the New York Stock Exchange built sideways. But now the New York Stock Exchange is in all-time highs. So that is great to see. And then quickly to these other indicators. Hold on, we can't have the daily. Overbought, oversold into positive territory, so that's good. 10-day moving average up volume versus down volume is positive above and climbing higher now. And then new highs are actually exceeding new lows now. And that's on the NASDAQ. That's great to see. And then the New York Stock Exchange, same thing. Here, here, and here. So on to earnings. Starting off Monday, following the three banks last Friday, we have more banks and more financial institutions. Goldman Sachs and BlackRock are the two big ones. Then Tuesday before the open, we have Bank of America, United Healthcare, Morgan Stanley, Charles Schwab, PNC. After the close, we have more financials, IBKR, and AEHR before was liquid, but not anymore for us. But that's still a potential name if it can become liquid after maybe an earnings surprise or something. Wednesday before the open, we have ASML. That's a big semis name. We have J&J, big part of the Dow. And then after the close, we have United Airlines, Discover, which is another financials, STLD. And then before the open, we have the big TSM, which is one of the biggest semiconductor names. They manufacture almost everything. Domino's Pizza is a big retailer. Blackstone Group, another financials name. And then after the close, Netflix, ISRG, big healthcare name. And then Friday, more financials. American Express is a big one there. And in earnings season, this is one of our favorite times of the year. Well, we have 4 of these times. We can start looking for earnings gappers that beat and raise, have huge surprises. And just to give a reminder of what I guess a perfect one looks like, NVIDIA is one of them. Yeah, built this nice long range, and then on earnings, it gaps up into blue skies. And that's exactly what we want to see and on huge earnings and revenues and surprise. SMCI is another one. We'll go back here. This was not exactly on earnings, but they pre-released some guidance, and that caused it to gap up to all-time highs out of this huge neglected range. So those are a couple examples just to keep in the back of your mind as we head into this earnings season. And then finally, economic data. Last week we had the big CPI and PPI. This week we still have some data regarding. Sorry about that. We have Powell on Monday at noon, and then Tuesday we have U.S. retail sales, and then Wednesday some housing data, housing starts, building permits, and then the Fed Beige Book. Thursday, we have initial jobless claims and U.S. leading economic indicators. And then Friday, we just have some Fed speakers. And that is going to wrap it. Connor, do you have anything else?
Nope, nothing else.
Sounds good.
It was super encouraging to see IWM hold gains last week. So pretty optimistic about the market. And we're just going to take it day by day. But
Yep.
there were a ton of good signs last week, so we'll see if it can continue.
Yep. So as always, we would love to hear from you. My email is ted@revereasset.com. Connor's is connor@revereasset.com on the screen here. Our Twitters are shown right here as well under our emails. You can also reach out to Dan and Don at revereasset.com. Our phone is 855 Real Wealth, and that's 855-732-5932. And as always, we named our flagship portfolio GROTECTION. And what that means is we want to participate and grow assets in an uptrend and protect money when we're in a downtrend. And if you're interested in becoming a client, please reach out to any of us. And with that said, we'll wrap it up for today, Saturday, July 13th. This is Ted Zhang and Connor Bates with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend. And we'll see you guys once again next weekend.